Okay, this video is on the percentage completion method of accounting. So what we're going to do is we'll come over here to, on the web, we'll set up our job status. So we're going to project the profitability of our projects based on our job status grid. Okay, so on this particular project here, we have our revised budget, our actual costs. We can project based on hours. We can project based on dollars. So we'll do it based on dollars for this illustration, and we'll set this view here. So here we have a project, and we have $17,000 in total estimated cost. And we'll come over here to one of our line items. We have $84,000 on this particular row budget, and we have an $18,000 actual cost. I'll double click on that. It'll show me the detail of those costs. If I go to cards, it shows me the images behind the costs. And then I have $84,000 in committed cost left, or committed cost total. And then I have a balance of 66,000. And if I double click on the 66,000, it's going to substantiate that number with our PO subcontract breakdown. So there's your committed cost, there's your invoices that have come in on the project, and this is what's left, what's been paid, and then what's in accounts payable and what's in retention. Okay, so here we have a cost to complete, and I can change that, and I can say, okay, so we have 66,000 left in commitments, and let's say that's the total. Maybe so the total is going to be 84 after that. Maybe we've got an extra couple thousand, so we'll say $86,000. Or I can say it's 22% complete. So those are the three data points you can do on your projections. You click off the row to save the data, and then another concept is you can project based on hours. So if I go to my labor numbers, let's say I self-perform or I'm a subcontractor, I'm going to have labor. So I'll say I've got actual hours cost to complete, hours to complete, and this view is probably a little bit too wide. So I'll come over here and I'll say those are my actual hours, and I can double click and see that. I can say I've got 20 hours left, or I can say I have 75 hours total. And it changes my percent complete for both sides. So for my actual costs and for my percent complete here, I can also say I've got 90% of my labor done. If you get that little message, you can click on the middle of it and it'll go away quicker than waiting for it to go away. So now I'm at 90%, and it projects my dollars based on the hours that I'm putting in over here. So a couple different views there. Okay. So the default view, and this filter row can be cleared by clicking that icon, or you can just delete it. So now we have $588,249 in total estimated cost. So I'm going to come over here to Toolbox, and we'll do our summary of contracts. And I'll say use the job status method, preview, and I get my small job schedule on the first page. I get my completed job schedule here and my uncompleted job schedule here. I'll make this smaller so it's a little easier to see. And so I have my uncompleted jobs, and then my less prior year amounts gives me my numbers that will show up on my income statement. My project that I projected was the golden job, 588,249 was the number that I came up with here, 588,249. So you can have your project managers project the profitability of your projects, then that will drive your financial statements. So we'll window that and we'll move it off to the right. And we'll bring up the income statement. Print it for the same cutoff date. Okay, so what we have here is our income statement, and we have our costs will tie in here. There's our costs. And then we have our indirect costs. We have three types of costs as a contractor: your direct costs, your indirect costs, or your indirect cost pool, and then your operating expenses or sales G&A. And here we're perfectly allocated, and that's because we've run our burden utility grid. So what we'll do here is we're going to illustrate the over under billings first. Our revenue 262,499, 262,543. It's close because we didn't change the projection very much, but we'll accrue our over under billings. Job status, calculate, and there's our under billings, and then our over billings are there. And I'll say post. It does our accrual and our reversing entry for us. I'll hit the lightning bolt to refresh the data against the database. And so now I get 262,543, 262,543. Now I'm going to drill down into one of these costs, and I guess that must pick something different than that. Here's an accounts payable invoice, and I'll pull it up on the screen, and I'll add $10,000 to it. Click OK. Okay. It's a piece of equipment, so it's requiring indirect costs. We're requiring a piece of equipment for that row because it's an equipment type indirect cost. Okay, so now I'll come back over here and I'll hit the lightning bolt. And now I have an over under allocation. My cost, my true job cost is 132. My job cost reports show 122. And so I want to retroactively allocate that indirect cost to true it up so my loaded labor rates and my burdens are accurate. I can calculate those correctly. So now I'm going to come over here to the web, and I'm going to come down here to preferences and accruals and burden utility. And here we've already got it set up for January. We're going to allocate all of our indirect costs, 100% of them, based on cost group costs and based on labor. You can do it a lot of different ways. This in practice is probably what we see the most. So I'll go ahead and execute that. And it's going to retroactively allocate those indirect costs. Now we'll come back over here and we're going to hit the lightning bolt to refresh the database. And you'll notice that we have 612 of over under allocated costs. And the reason that we have a balance here is because our accrued wages have changed. We have labor that was worked on in January, paid in February, and we reburdened those wages. Those wages show up in here because the job cost reports are based on the work date, not the general ledger transaction date, which is the check date for payroll. So we're going to have to reaccrue our wages. If you have equipment that's tied into your labor, then you'll be it's not only wages, but it'll be equipment if you're a civil contractor. So I'll say post it. I did my accrual and my reversing entry the next day. I'll refresh my report against the database, and now I have a zero over under allocation, 3 cents. And my job cost report shows 122 because I haven't refreshed it. When I refresh it, it'll show the 132,541. 132,541. So now my cost changed, which means it changed my cost plus gross profit, and my over under billings have changed. So my revenue is no longer tied in. So it's going to go to 274 where it's 262. So we're going to say utilities, accrue, over under billings, job status, 0131, calculate it, and then we'll post it, our over and under billings there and there. And it does our accrual and reversing entry, and I'll refresh the income statement against the database, and now I've got 274,479. That's a quick overview of the automated percentage completion method of accounting. We have quite a few more features that for analyzing the effect on profitability with profit fade and gain. But that's what we're going to illustrate here.